Bitcoin crash 2021. Massive crypto market crash explained. Is it game over for cryptocurrencies? Hi folks, welcome to the Financial Argument. There was a massive sharp decline in Bitcoin this weekend, which doesn't come as much of a surprise, considering there's been much speculation about when this will eventually happen. Along with Bitcoin, almost all altcoins shared the same fate, quickly dropping in value. In this video, I'll discuss the Bitcoin crash, outlining some of the factors that may have contributed to the sharp decline, including technical reasons. Then I'll continue my analysis by touching on what may happen next. Many wonder if last weekend's crash signals a buying opportunity for those who missed the boat and don't want to buy at high prices. Or does this mark the end of the short-lived glory of Bitcoin? I'll discuss all of this. Bitcoin lost close to 15% overnight, dropping from $60,000 levels to around $51,000 levels. After the sharp decline, it recovered and climbed to $55,000 levels. As I prepare this video, the Bitcoin price is $57,000. For now, it's appearing to make up for the losses. A decline like this hasn't been seen in the last few months as the Bitcoin craze caught the world by storm. And like I mentioned, there were much more massive declines in altcoins. When we look at the highest level Bitcoin has seen, which is around $64,800, and the lowest level, it's safe to say we're looking at a 21% decline. If you aren't a new investor and have been following the cryptocurrency markets for a long time, you know this is completely normal. Losses of 15% or more with corrections of up to 20% are common. So why was there such a sharp decline? Let's take a look at some of the speculation, although much of it doesn't appear plausible to me. Prices were already taking a downward trend as of last week. On April 16th, Turkey banned the use of cryptocurrency payments, citing risks which caused a wave of selling and Bitcoin's value to fall as a result. In truth, the situation has been deliberately misrepresented in many news reports, giving the impression that Turkey has banned cryptocurrencies altogether. However, the use of cryptocurrencies and crypto assets was only banned for purchases, not altogether. Of course, this is not ideal, but it should not pose a risk to investors. Many mainstream media outlets published articles describing it as a complete ban, which is utterly false. This deliberate misinformation is nothing new. But what did come as a surprise was that famous Bitcoin accounts like Plan B were handling the situation in a way that clearly misunderstood what the ban means. Plan B tweeted on April 15th stating, "If this is how Turkey government treats property rights and steals from its own citizens, I can only imagine how Turkey government treats tourists, especially tourists that own Bitcoin, airport checks, etc. Brains and capital will leave Turkey." Plan B's other sources' misrepresentation of the situation contributed to the misunderstanding of the ban. The inaccurate portrayal by the media and social media accounts quickly circulated and in part contributed to the decline. Despite this, some sources accurately conveyed what the ban decision actually meant. This Twitter user posted a sarcastic tweet directed toward the panicked sellers who were misrepresenting the situation. Despite the concern and misinformation over Turkey's decision, other factors played a much larger role in the decline. Fear, uncertainty, and doubt, often shortened as FUD news, causes such declines in Bitcoin. CNBC, for example, decided to take a Reuters article from a month ago on India's possible plan to ban cryptocurrencies and put it on the air. The source? An unnamed government official. Twitter user FXHedge, who has over 157,000 followers, tweeted out that the U.S. Treasury would charge several financial institutions for money laundering using cryptocurrency. No source was cited, and the post has since been deleted. This tweet is the epitome of FUD. It's unclear who said it, who the owner is, and for what purpose they tweeted this. Social media posts such as this contributed to the damage. Let's move on to the technical reasons behind Bitcoin's sharp decline. The biggest one being Bitcoin's hash rate dropped over 45%, a very serious drop. Chinese cities Xinjiang and Sichuan together have well over 50% of the overall Bitcoin hash rate, and some reports say problems in coal plants in Xinjiang caused the 49% decline in Bitcoin's hash rate. According to Twitter user Wunamic, price and hash rate have always been correlated. Take a look at this graph comparing April 18th's Bitcoin price in relation to the hash rate on the same date. He also references the hash rate collapse of November 2017 and Bitcoin's decline that followed. Considering all this, it seems to me that technical reasons offer a more plausible explanation than the deliberate misinformation going viral in both the news media and on social media. We must also consider the fact that the price of Bitcoin has risen significantly and fewer people are investing in it as a result. Many investors are afraid to lose the serious profits they've made, causing panic and even small price declines, which leads to a snowball effect. If we look at Bitcoin's history, corrections are generally either the result of widespread panic and speculation or caused by a technical reason. When this happens, Bitcoin's price is pushed down. And if prices recently increased and investors are afraid of losing their profits, the party starts all over again, and big waves of sales occur. Besides these reasons, I think the cryptocurrency market is one of the toughest in the world. When rookie investors who lack even basic economic knowledge flock to the crypto market, it creates a quit signal for experienced investors. This is the case not only for crypto, but all markets. In such cases, experienced investors see it as a time to take their profits and leave. Thus, major corrections occur. And now let's discuss what might happen next. Could the situation get worse? As I prepare this video, the market seems to be recovering. I don't know what will happen by the time I upload it because it's a very difficult market to predict. However, it's useful to consider a few scenarios for those who haven't invested yet or are considering foregoing the market altogether. First, we need to understand that corrections are actually quite normal. When it comes to Bitcoin, there may be corrections up to 20% or even 35% at any given time. If we examine this graph carefully, we see that in 2017, there were a total of 6 corrections and some of up to 40%. Between 2020 and 2021, there have been 4 corrections so far. When we look at the figures, it's possible to say that the corrections were very minor compared to 2017. This is because there are so many more institutional investors in Bitcoin now. These include companies like Tesla, MicroStrategy, PayPal, some big banks, and even some Norwegian billionaires. Bitcoin also faces some possible scenarios that could worsen the situation. In this chart, referenced by Crescent Capital, we see the Shanghai stocks versus the global stocks index. According to this data, whenever the world stock markets remained high and the Chinese stock market fell, somehow the world stock market subsequently fell as well. This was the case in the 2020 crisis, and now there's a big gap between the two indices. This graph is actually one of the biggest signs put forward by experts that indicate a big drop in the stock markets during the coming summer months. If a major stock market crash occurs and a Bitcoin drop happens at the same time, then the selling frenzy could be even more dramatic. However, it's impossible to predict what will happen. These are just my observations. If we take a look at this graph showing the global liquidity rate of the MSCI World Index, there doesn't appear to be any problem. We see the money printed by the central banks of the world corresponds with the stock market. It's also safe to say that there's been a slowdown in liquidity recently. Now, if liquidity begins to decrease, then the stock market may start to fall with it. In order to prevent this from happening, some central banks continue to print like crazy. Finally, if we examine the current technical outlook, it broke the recent upward trend as a result of the recent big decline, which was a bad signal. We see that there are support points at the $50,000 to $51,000 levels. If it declines further, there's another support point at the $46,600 to $46,000 levels. If the upward movement continues and enters an upward trend yet again, it's possible there may be serious resistance at the $59,000 to $60,000 levels. What I'm trying to say is there's no reason to be afraid of the major corrections that took place this weekend, as they make the system even stronger. But never forget that the law of the jungle also prevails in the cryptocurrency markets. The crypto market is tough, and you have to be very experienced to understand how tough. There's a lot of uncertainty in the market. However, no one in the stock market fears that tomorrow the government will ban us. Even the Fed freely printed money to support the economy. Experience combined with knowledge means a lot. Even those who've been very successful in other markets may fail when it comes to crypto. My portfolio mainly consists of physical gold and silver, but as you may know, I added Bitcoin to it some time ago. This is not investment advice, but Bitcoin should be used as a diversification asset. Apart from that, it's best to prepare for the great financial apocalypse with physical gold and silver. It wouldn't hurt to add some Bitcoin if you're sufficiently prepared already. Please like this video and subscribe to the Financial Argument channel. Turn on notifications to be notified of new uploads and stay tuned for the next video.